Don't let them get away. I was actually thinking about this the other day. What's better, flakes or twirls? If you're from the UK, you'll know what I'm talking about. It's a chocolate that we like to have over here. And what's better? Because a twirl is essentially a flake that's got chocolate wrapping around it. And does that make it better or not? And well, the obvious answer occurred to me later on. It wasn't immediately obvious, but once I realized it was. And it's much like technical analysis in that respect. And that it's clearly that Wispas are better than either of them. And when I realized that, I stopped thinking about it. But it was a conundrum at the time. Speaking of which, so is this. Hi friends, Ripple Technical Analysis right here for you. We've got a nice measure move coming in, not measure move, a nice target, Fibonacci retracement target for us. Up there, 263. Wow, 263, that's some target, Rocky, isn't it? Well, that's what we're looking to in terms of the broader structure of things. But actually, I want to zoom in here, right now, and show you a closer, shorter term target for us. Still fantastic trade potential on the go, and discuss the reasons why that is the case. Okay, so this is the intro clips. My name's Rocky. You're going to see that in just a second here. If you're new to the channel, like buttons massively appreciated, and back over to the charts. And what we're looking at here is a couple of different Fibonacci's on the go at the moment. And I'm going to just remove these and draw them back in again. Helps you because you get to see the best way to draw these things in, and of course you get to see the numbers forming up themselves. So we've got old ones we don't really need to look at too much overall from the past. At this point though, this is one that I do want to show exactly where we were, and this helps form the context of the understanding this pullback so far at least. And then there is another one that I'll draw in, and another one, and another one, and it really just makes it so super obvious for you, all the clear levels. So if I just drop this one for now and show you though that of course moving averages going towards the top side, we are above a key area of support and resistance at the moment. That's really great, and we do have a clear target up above it, about 260, which I spoke about, with of course our bearing in mind our previous highs and around about that $1.90 to $2 region as being crucial for us in terms of breaking past and profit taking and not having a double top or something like that form, obviously, right? But we need to understand, where did the prices drop down to? And just popping out the old Fibonacci tool again, looking from the lows we had in December 28 up to these highs, you can see that we dropped down as far as almost the 618 golden pocket zone in here, and that's near enough where the 50 simple moving average is. And of course we've made it back up to, which is this area here, which is very clearly an important zone where the prices are. And to designate that as an important zone, I've drawn a green box around it. But you can see that we came all the way down towards the 618, moved up, and that has been a natural enough occurrence. Mr. Fibonacci himself would approve of that overall, right? Then where did the prices go in terms of this movement up the way that we've seen so far? Let's just draw it together, and regular watchers of the show will not be surprised at all to see that in this kind of confluence of messy writing that's hard to see the numbers, that's where the 618 golden pocket is, and that's where the profit taking is happening at right now. Again, natural order of things, seeing that profit taking happening in there, and it forms up a zone for us where we can actually say this is where we're going to manage our risk. Let me just demonstrate that with one final Fibonacci, and of course you can draw these things in yourself and take a look at it any time and see that the 236 there lines up with that orange line. Oh my gosh, the other lines were lining up with it too. Doodle-doo-doo. The truth is out there, ladies and gentlemen. And of course and let me just kind of reveal that for you. My name, by the way, I am Rocky Outcrop from, of course, the CIA trading. I'm not supposed to be doing this, just kind of think of me as the sort of the whistleblower on crypto, if you like. And what we're looking at saying is that you manage your risk between that zone of with a 618 pocket and that 236 line. So you're looking down and saying if the prices drop below 145, you're not going to hold on to positions in the short to medium term. Now if you got in here around about the 155 zone, where you'd be looking to take profit at initially is probably going to be in about a 2.5 to 1 risk to reward move here, in around about the 180 to 190 to $2 area, depending on just strictly how greedy you are. If we do look beyond that to a 3.5 to 1 move, you're taking on a lot more risk with regards to that high, but you probably would want to leave something in your back pocket, says my precious, is if we do go on up the way, because we're looking to try and take profit then at 260s overall with this move, resulting in an 8 to 1 risk reward overall, if that were to be your overall case for you. Now if we did drop down the way, we have to acknowledge that we probably would come down to that line, risking a biscuit with regards to that trade. So maybe you might want to risk manage if you're looking at a broader term structure, as saying that we pushed down past the yellow 18 15-period exponential moving average here. You would maybe drop out at that stage, and that's looking down towards the 126 region, resulting in another 3.5 to 1 trade there for us. So that's what we're looking at. That's the reasons why. There's other things I could be talking about, like boom, hidden bullish divergence. Oh my god, that's scary good with this. I could be talking about the news, the SEC giving them sort of carte blanche to go and crypto as much currency as they want. And I could also be talking about this beautiful cross that we're seeing on the 24-hour time frame on the DMI with the ADX in a position of strength, while the stochastics cross over the neutral line, spread out towards the top side in a bullish scenario. But hey, who wants all of that technical analysis? You tuned in for the risk management and the profit taking zones, and I delivered them earlier on, which makes me begs the question, if you're still watching this right now, why you haven't hit that like button, because I just delivered all of it in a neat package for you. I hope you appreciate that and like it and all the rest of it, so much so that you share it with a friend. I mean, if you did, right, I would be overwhelmingly happy. So thanks. What have we got here in the chit chat then, ladies and gentle children? We've got the Zig talking about flakes, saying that they're better than twirls. Well, yeah, no, okay, it is the divine luxury, but Wispas I think are probably better than either of them in terms of it depends, right? If you're looking for just sheer decadence, of course the flake cannot be beaten, but if you're looking for the bubbles and the chocolate melting in such a way as to give you the most pleasurable experience, then Wispa probably beats either of them. I don't know though. I guess it's like a subjective world out there, isn't it? What else is there that we want to look at before I go away? I guess since nobody's asked, I'll just do the charity crypto TA